The market has split in half again today, but the dividing line is not quite where it looked at the opening bell. The Nasdaq is down 0.1%, the S&P is up 0.3, and the Dow is up a full 1%. A gauge of semiconductor companies has fallen 6%, and money is rotating not just into big technology, but into ordinary economically sensitive businesses. Sherwin-Williams is up 8% and Coca-Cola 5%, both on earnings beats. The pressure on chips keeps coming from abroad, where Korean chipmakers have now lost $1 trillion of value in 6 weeks, and SK Hynix has just had its worst month since 2008. There is a new warning inside today's earnings too. Corning grew its optical business 32% and still fell about 20% because its guidance was merely in line. This market is punishing artificial intelligence-adjacent companies for being good rather than great, which raises the bar for the 4 giants reporting over the next 2 days. The Federal Reserve began its 2-day meeting today, with traders positioned for a hawkish hold and as many as 4 officials voting to raise rates. Alphabet did everything right on the price screen today and still moved further away from a trade, and the honest version of that is worth telling. It is up 2% at $333, closing on its high, a 4th straight session of higher lows, and the joint best full-session performer among the giants. But this morning this system predicted that Alphabet's safety gate would open just before its momentum trigger fired, making the signal valid. The opposite happened. Nvidia deserves credit today, and this system will give it. On a session when the semiconductor gauge fell 6% and Korean chipmakers extended a $1 trillion, 6-week wipeout, Nvidia dropped to about 193 and then recovered to roughly 197, finishing slightly higher. That is genuine relative strength inside its own wreckage. Nothing in the argument against it improved, though. Reports Wednesday, July 29th, same afternoon as the FOMC decision. 2 landmines on one day inside any 11 to 13-day hold. It is the strongest name in the book today, plus 2.3% to 398.08, with a 400.24 high, a 3rd straight session outperforming through the chip route, and it has now cleared the gate that was blocking it this morning. The very slow filter passes, lagged 392.97 SMA, 392.24, and gates _pass is true. Reports Thursday, July 30th with AWS the focus, GDP and PCE the same morning. Mechanically, it is the closest mean reversion setup in the book, and I still will not take it. RSI, 6, is 48.08, rising hard from 26.70, just 1.92 points under 50, and closed 231.09, sits only 0.16% above the 230.73 lower band. Both legs are genuinely near. But the band leg is the problem. Price is already above the band. So the reclaim has effectively happened without an RSI. 50 cross to pair with it, and a bear RSI crossfires nothing. Standing exclusion, and it went backwards again today. It is minus 0.9% at 306.57, with a 300.72 low. A fresh leg down on a day the Dow rose 1%, and the post-earnings collapse, 374.01 to 319.69 on July 23rd, minus 14.5%, has still never bounced. Trend arm is blocked for months, not days. Close 309.75 against the SMA. 200 at 353.57 is a 12.4% gap, and both other gates fail too.